Welcome back to Indie Housing Market. I'm Kyle Morris with Morris Property Group and FC Tucker. Shelly has a migraine today, so she is out. Although it's a really nice fall day, and I think she's mailing it in. I think she like fake called in sick. Like how like you always get like when you were younger, and everybody got the like nice day flu. Did you ever do that? No? Nobody ever did that? Nobody called in on a nice day? Me either. Yeah, I was a great employee, evidently, as a kid. But we also have special guest, Mark Lewin. I'll let him introduce himself. I won't say a legend in the mortgage industry, but that implies age and that you're not old. Like you and I are actually very close in age, so then that means I'm old and I'm not old. So
I don't feel old.
Yeah, there we go. Maybe it's my white hair on my head would imply that I'm
distinguished.
You know what? I like that. When you have white and gray hair, nobody ever asks how long you've been doing something.
Very true.
You know. So anyways, but I'll let you introduce yourself real quick. And then we're going to talk about some mortgages in the market and kind of kick it around because you have more experience when it comes to longer timelines of how things work out and play out and trends. And obviously we can't predict the future, but doesn't mean it's not fun to talk about.
Right on. Mark Lewin. Let's see, I got in the mortgage business in 1990. So now I'm going to take
sixth grade?
Yeah. I graduated IU a little bit after that. And so I'm the regional vice president for OneTrust Home Loans. Formerly, I was regional vice president at Caliber Home Loans for the last 12 years. So I wrote loans for 30 years, 30 plus now. So I don't want to say I've seen it all, but certainly seen the ebbs and flows and ups and downs and left and rights of, not only the interest rate environment, but changes in government regulation and changes in our licensing requirements, and definitely been some high tides.
Right, you got to experience the Dodd-Frank Act.
Yeah.
How many loans do you think you've done? I have a general idea of how many. I mean, I could have my numbers pulled and do how many houses that I've sold, right? But I couldn't tell you how many houses I've shown, right? So I'm curious, like, if you could ballpark how many. I mean, you're just making it up. I get it. At this
Actually,
point.
I have.
You know your stats.
I have my database, and I am
6'7" out of Indiana University at point guard. You know your stats.
Let's see, my database. I am 47 loans shy of 6,000 customers.
Wow. That's a lot. You get a gold watch for that, or you get like a chocolate bar?
Attaboy.
You get an attaboy?
I get an attaboy.
Like,
tap on that.
Way to do your job there,
No, I have worked with some really cool clients over the years.
Bet.
And I can tell you out of that just under 6,000, probably 2 or 3 that just stuck with me for years. One of them was a World War II veteran.
Really?
So, well, as the last remaining, God rest his soul, he did pass away a few years ago. He was one of the last remaining survivors in Pearl Harbor.
Really?
Bought his first home at the age of 83.
His first home?
First home at 83 years old.
That would be a really cool process. When so me being in recovery and stuff, like I get to help people with their first homes who have been through a lot, and the perspective and gratitude that is there for somebody who has gone through something traumatic, and obviously Pearl Harbor would be something like that. Absolutely. I can't imagine what that experience is like for him, but then B, when you experience something of that magnitude and that kind of tragedy, it just changes your outlook on life, quite honestly, right? So it'd be interesting to see him at 83 do something like that. I bet it was a pretty powerful thing.
It was so cool. He was so unbelievably grateful. I remember the back when we actually used to sit down with people face to face across the table.
Yeah.
I said, please don't think I'm weird, but can I give you a hug?
Yeah.
And because I would never, I don't think outside of when would I ever get the opportunity to meet somebody like that unless I went and attended an event. So it was just super, super cool.
There is so many people that we run into have so many just kind of cool stories that you don't even know. They just go about life, They're not looking for accolades or anything like that. I've got to meet some really interesting people myself. Obviously, you've met probably some cooler people. Let's just be honest. You've probably met some cooler people. But we do live in the same neck of the woods. I was talking so I live in McCordsville, and so does he. Hope you don't mind that I tell everybody that, but I already did, so who cares? But there's a place out by us in Fortville called the Broadway Diner, and his name's been up there for forever. They have amazing country fried steak over there, by the way. It's a little hole in the wall. If anybody's listening, go out there. It's a great little mom and pop place. Construction kind of sucks out there right now.
A little tough going through Fortville right
Yeah,
now.
but they've still done well, and I don't know. I've just always noticed your sign. I think I told you, I was like, I bet he paid for that like 15 years ago, and it's still out there. It's like polyurethaned in or something. I was like, they'd have to get whole new tables for you to lose this marketing.
For sure. I think I was on some coffee cups too there for a while, but they probably all broke by now.
Right? I'm like, they didn't think this out for long term to how to make this generate future revenue. They just took all these business cards and then just polyed them to the table, and then they're stuck there for 30 years or whatever. Okay, so what do you think of the market right now? So we were talking about this before we got on there. I am very busy. It feels like May, June busy right now, which is very odd for this time of year. We're usually busy, but like not like spring, summer busy as we start to get into the fall, right? Like, and we talked about on the podcast a couple of weeks ago, I got inundated with listings, and usually a listing is going to mean a buyer also at some point, like whether they move to Florida, they move to Colorado, whatever it may be, except for if it's, let's say if it's a death or divorce, sometimes that tends, obviously if it's death, it is what it is. And then if it's a divorce, sometimes there's a rental there for like a year or two while people kind of figure out what they want to do. But for the most part, a listing also is representative of a buyer, but I wasn't really seeing that. However, in the past 2 weeks, I've started to become inundated with buyers as well, which is amazing. It's just odd for this time of year to be at this level. And you were kind of saying the same. August, and you had a pretty good idea for why you thought. I'd like for you to explain that, because I had thought about the back to school piece of it, because we always deal with that. But since you're more in, because you brought up, do you think it's because of mortgage rates or do you think it's because of election? I was like, it's kind of both. But you were talking about, announcements in July plus August, and I don't know, like I hadn't thought about that, and I think you're pretty spot on with that.
August was down compared to where we are now. We are very busy now, which is a blessing. I asked people why, and everybody of course had their opinion. I don't think there's any right or wrong answer.
Right.
The Fed had indicated that they were looking at an interest rate cut in September. Now, that had already been factored in. The world was planning on at least a quarter cut. Unfortunately, we got a half. And then I have a 13-year-old at home still, and so back to school, and a son who's a senior in college. So we had, certainly activities and getting them back into school, and then certainly the uncertainty in people's minds of the overall economy, the election, the stability of their employment. Those nerves have calmed a little bit. At least we've seen it. If that's any representative of the activity we picked up, I think those nerves are calming. Now we're all looking for the next piece of economic data that come out that's going to drive interest rates one way or the other.
Yeah.
But I think it was a combination of several things that caused August to be a little slower than traditional. I can tell you at 34 years of doing this that the fourth quarter is usually my strongest quarter.
Same. I haven't done it 34, but I would say historically speaking over the past 6 years, fourth quarter has oddly enough been my strongest quarter, which is really kind of counterintuitive actually.
I look at it, I built my career on a lot of first-time home buyers. And the first-time home buyer says, I don't want to rent, and I don't want to live in mom and dad's basement anymore. I want my own place. And if it takes them all year to save some money to get in the position to buy, that's my methodology. I think, okay, I worked all year, I worked hard, I saved my money. Now let's go find a home in October, November, December, which is great.
Which is, historically speaking, a good time to buy because there's less competition.
Agreed.
Right? And you can tend to take advantage of sellers to a certain extent, because if you're moving in the winter, you tend to have to be moving, right? Mm-hmm. And so I myself have actually bought and sold personally in the fourth quarter because of those very reasons, right? We thought we could do a little bit better. Obviously, your inventory tends to be a little bit less. But like when I was a first-time home buyer, even when I was a second-time home buyer, it was more about like we needed a property. Like the first time it was just we were grateful to get a property. The second one we had kids on the way, right, or a kid on the way, and we just needed something bigger than the ranch that we had bought as our first home. So that stuff doesn't tend to be, you're not worried about a school system when I'm like, yeah, this kid isn't even going to be in school for the next 5-6 years, right? So I don't know. It is kind of odd that you said that because we have experienced the same thing. And I don't know what is going to happen with rates. I know that they're going to go down. Like, I think that's pretty universal thought. Where they end up, my team member and I was telling you this, my goal, and I'm sure a lot of people don't want to hear this, but, I think long term for us in a country and a society and all this stuff, like, I need us down around 5.5, and I need us to stay around 5.5 for like a decade. I think that would stabilize things. I think if we go too far down, it's going to push property values again, and then property values, next thing you know, you've got California values in Indiana, which doesn't make sense to me. And then if rates are too high, then people are stuck, right? And then people can't enjoy life because just the cost of living is so expensive in the first place. And I feel like 5.5 is kind of in this middle ground of, I don't know, it's not low, but it's not high, and it's historically a good rate, quite honestly.
Absolutely. If you go back the past 50 years, the national average on interest rates is 4.875.
Yeah.
Okay, so 5.5.
And that's rolling in the 2.9.
Correct.
Yeah.
Correct. And so obviously we've had higher years, which we've experienced over the last 3. We've certainly had lower, which we experienced in 2020, 21. But, I'm going to really date myself because I sold rates, double-digit rates. I've closed loans in the 10s.
Yeah.
So 4.875 seems like a really good deal, a really good affordability. We shall see.
You remember in 08, 07, where people were just doing everything they could to refi down into 5s? Mm-hmm. People out there just giving away free money in the 5s, and now we're like, no, it seems kind of high.
Oh, there were times where we had to tell people we're 30 days out from getting a call back.
Yeah.
It was people, when I started, I can remember back in 92, 91, 92, rates that were in the double digits, and they slipped down to 8s. We couldn't refinance people fast enough. Then they went to 7s, and the same thing again. Then they went to high 6s, and couldn't get it done quick enough. People were refinancing 3 times in a year.
So I'm curious so this past weekend is a good example. Everything has been sitting on the market longer, right? And I'll go into the stats for like Fishers and Noblesville. And I know Shelly did last week, but I didn't get my numbers in. I looked at some houses this weekend. One of them had been on the market just a couple of days. It sold over the weekend. One of them had been on the market for like 2 weeks. And historically, well, I'm going to say like over the past 45 days, I can go look at that house again, right? The house was gone. Like out of the past week, stuff that's sitting is selling. And we listed 3 last Thursday. One of them sold in 3 days. The other ones are still on the market, whatever, which I'm not concerned about, obviously, just because of days on market. But what I'm really surprised about is the uptick in purchasing of stuff that's been on the market over 10 days. I'm curious what you're seeing with applications, because applications predate me for the most part. I would say 50% of the time. How often do you get an application? Is it before the agent is engaged or not?
Not very. In my world, having almost 6,000 past clients, I get a lot of repeat calls. But traditionally, if it's a newer client, I don't get the borrower says, well, I'll wait till I find the house I love and then get pre-approved.
Yeah, that's fair. I guess that does happen a lot.
Which is really the opposite way they should be doing it.
Yeah, that's horrible. Because then I'm like calling you on a Sunday night like, hey, we're trying to write an offer. I need this done.
Yeah, an agent, when I first got into business, told me if I'm working, you're working, and it stuck with me 30 plus years later. And I don't mind that, but frustrating, for you to call me on that Sunday evening and go, oh, I hope you didn't show them homes all weekend long.
Yeah.
Because unfortunately we're not going to be able to help them. And that doesn't happen a lot, knock on wood, but it's certainly upsetting to all parties when it does.
My bigger headache is actually it's not the loan officer. It's not me calling you on a Sunday saying, hey, I need a pre-approval. It's then the phone call back like, cool, I need W-2s, I need bank statements, and then the client ends up, because they're not prepared to move that quickly. Whereas like you and I are, right? Like this is fast-paced industry for us.
It's certainly gotten easier over the years with the ability to get digital verifications and things of that, and you can get that data, services like the work number, things of that nature, and a lot of the banks, they'll cooperate. They can enter their information. We can digitally verify, and it's gotten a lot easier. Now, unfortunately, not every employer does that, and with the guidelines, since Dodd-Frank and the thing we deal with now is variable income. That's a new terminology, and if you work 40 hours, but one paycheck says you work 32, we need to know what's going on here. And so that creates a little bit of headache. And so the last thing that me or any other lender, I think, would tell you to do is like you're pre-approved, then get their docs and go, whoa, this didn't match anything that they
said.
Yeah,
but it's better in the world of no doc loans. You remember that?
Oh yeah, I remember.
Like, just tell me what you make and you're good for it.
I remember 07, 08, I think I told people that I was, a banker, and it stopped it there, because if you said you were a mortgage rep, you were not looked upon favorably. It was your fault. I'm like, wait, whoa, I never did subprime. So
you ever seen this is
Big
gonna
Short?
date me. Well, Big Short, but I'm gonna go older than that. You ever seen Nothing But Trouble?
I have not.
Oh, you're killing me. It's a Chevy Chase movie. It's got digital. It's Demi Moore. Anyways, Dan Aykroyd's in it, and he's like, you're a banker. I guess he hates bankers because he blames bankers for like the downfall of his family and all this stuff. Anyways, great movie. Random reference for me. But okay, so where do you think this goes? I know you're not going to be able to predict the future. I know legally and ethically you have to tiptoe here. But it's just us girls talking here, and so it's like, what do you think? I personally think market's going to do better. I think right now is an ideal time to buy if you have the ability, because rates are lower, and I can get you stuff on houses, right? My biggest concern is come spring, we don't have the inventory and it's competitive again.
Agreed.
And I don't like putting buyers in that situation, but I don't have an option.
Right. You will have spring. You will have more homes for sale, more items to select from, but you will have more buyers.
Yeah.
Right. I 100% agree that the fourth quarter is always the best time to buy. For some reason, rates. I don't think there's any correlation here, but I think rates typically calm down in the fourth quarter. You will have less competition. Anybody who is willing to move when it's raining and crappy and freezing out they're going to get a better deal.
Yeah.
Because the average person says, I'll just wait till spring. Your guess is as good as any expert on interest rates. I think
made up. That's what you're going with. It's made up.
We do anticipate rates are always quick to go up and slow to trickle down. So right now we're on that trickle down. Let's just hope that continues.
Yeah. Either way, it's not just that, right? It's the interest rates are what they are. It's everything else that costs so much, right? You and I were talking about rent is so expensive, and there's waiting lists to even get into rent.
Agreed.
It's just mind-boggling to me, and I don't care about any political affiliation whatsoever. Like, this is the way our economy works is way more complex than people actually imply it is when it comes to political candidates and all of this other stuff and what somebody can or cannot do. Not to mention we have a global economy that we're tied to as well, right? And there's nothing we can do to separate from that. So, like it or not, how the world is performing also does impact us, right? And I think it has taken the world as a whole longer to get out of COVID than it took America, quite honestly, or the United States. And I think everybody is improving and doing better, and I think it is what it is. So I'm hopeful. I know this much. People will always need to buy and sell. Like, my role is just to help people get in the best situation that they can, regardless of situation, because during COVID, Shelly and I would talk about this a lot. Usually the housing market is made up of, I don't know, we'll call it, this is a made-up stat, but it seems accurate. 20% of people are moving out of convenience, right? And similar for you, probably 20% of you, we talked about this, probably 20% of, your business is made up of refis, right? Historically speaking.
Mm-hmm.
And in 2020, 21, and 22, 80% of the market was people refining or people moving because of convenience.
Agreed.
And I think we lost 7 years of those people, right? And so I think there's just a trickle-down effect of, like, there's just less of that helps offset kind of some of the marketplace.
Absolutely.
So
this was the fastest rate increase we'd seen in the history of mortgages.
I'd have to go back and look at the numbers. What was it? We went up because it was it March of 2020, or I'm sorry, 2022, where it started to go up, right? And then it went up like a point in like 2 months, I think, something
Agreed.
like that. Over March to the end of April, I
Fast
think we
and
went
furious.
up a full point. And I don't know, I should know this stat, but it honestly just doesn't matter to me. What do you think we went up? We went up 3 points over 6.5 months, maybe?
I want to say in the spring of 22, rates were still in the low to mid threes, and
Yeah.
before you knew it, we were breaching 7.
Yeah. And that was like September.
Went up very quickly.
Yeah. I don't know. I don't see that happening again, but I also don't see COVID happen again, but what do I know? What else you got that you think is interesting with this? Buyers right now are the most qualified buyers could ever be because of Dodd-Frank. So even though it's layered, I think people look at, how do people afford these things? Well, like there's a lot more work involved in making sure people can afford these things these days. Like buyers these days are the most qualified that they
Absolutely.
have ever been in history, actually, right? I mean, that's just how legislation works.
Well, the GSEs are hammering lenders on what we call ATR.
I don't even know what that means. What is that?
Government service and entities. So that would be your Fannie, Freddie, Ginnie, and the ones setting the rules that we follow.
That's when you guys are talking shop. Those are the words you guys use instead of Freddie and Fannie.
Yeah, and then when Dodd-Frank rolled out, they had introduced ATR, ability to repay. And that's the one thing that we're looking at more than anything is, does this borrower have the ability to repay the loan?
What goes into that?
Well, it's your standard qualifications: income, assets,
DTI,
credit.
yeah.
Obviously, there's 2 parts to every deal. We look at the borrower's qualifications. We also look at the house. Are there any major mechanical defects, things that you would in your inspection, appraised values. We went through. We went through a rough time, and I couldn't tell you what years ago, where homes were being overvalued.
Yeah.
Right, and people were getting equity based on those overvalues, and those days are over. The appraisals are heavily scrutinized more than they ever have been before. We're still getting good values, good people. I'm not seeing, we're not seeing right now what we were there for years, where you had people were going 20, 50, even $100,000 over appraised value, making up gaps and things of that nature. So
biggest one I did, I've talked about it on here before, is during that market, I had a client and they had to move here to be with their family. They were retiring. They worked at Cornell as professors, and this was like literally like April of 2020, right? I was like, all right, I know it's competitive, and it was early, and we were ahead of the curve of being competitive. My team was as a whole. Wrote 20 over, lost it. Wrote 50 over, lost it. Wrote 80 over, lost it. Wrote 100 over, lost it. And at a certain point, you're like, what do you even do, right? It helped me get really, really good at writing offers because, I learned I can tell by looking at a house, I can automatically put you in the top 3 of offers. The offer I can't account for is somebody's desperation, right? And there was a lot of that during that time frame. I ended up getting them a house, and we wrote an offer for $200,000 over list. And the house was, I thought it was actually overpriced by like $5,000 when I looked at it. And that stupid thing appraised at $200,000 over list price, which is just mind-boggling to me still to this day. And it's got to be hard for you when you're looking at somebody, the loan officer, because they got a loan and then they were going to bring the difference. They just got really lucky they didn't have to. Mm-hmm. I was like, I don't even feel comfortable doing this. And she was like, what'd she say? She's like, honey, I've owned Apple stock since like 97. We're good. And I was like, oh, okay.
Yeah,
okay, you're good. Yeah, this is free money anyways. How does that look for you? Like when you're on that end and you're like, hey, just as the reminder, you're bringing 200 G's,
right. Oh, yeah. It's
what was the most you ever did? Curious if you're allowed to say during that time frame.
Gosh, I never had the big ones. I heard of the big swings, but they never came to fruition.
Yeah.
Because the one thing I've always said is you can't argue emotions, and people who are emotionally attached are going to do what they want to do regardless if it makes sense to them or not.
Yeah.
So I never experienced that. I really didn't. I think I most ever had was 5, 10, maybe a 20,000. I had heard of the crazy ones from coworkers, but personally never experienced it. So, going back to the appraisal piece, it was a shock there for a brief time because the homes were the data wasn't keeping up with the sales.
Correct.
The homes were selling, and it wasn't getting to the MLS, so the appraiser could find the data to justify the value.
Right, because the appraiser is using comps up to 6 months back, right?
Right, absolutely. Actually to a year.
Back then it was cases. A year, yeah.
And so now what we're experiencing is the complete opposite. Is we have 10 years of data that have been collected, and we can go back, and whether it's a purchase and refinance, and this is all, whether it be Fannie or Freddie, you can go, okay, this appraisal has been through the system 4 times. It's worth X.
Yeah.
Right. And if you didn't put a bunch of improvements into it, or you didn't upkeep it, it didn't magically go up $50,000 in value, because we've got this same house to look at 4 times in the past 10 years.
It did in 2021, but it does not now. Yeah.
Right. So you have more data now to
So it's interesting. You remember back during those time frames, like I can remember, like they're like, hey, this is what the house is worth, but they called it market conditions, and then there was like a 5 to 8% tack on
market adjustment.
Market adjustment. That's what it was. Market adjustment, because they didn't know either. You know, like the market was too fast paced for even appraisers to keep up with, and they caught a lot of flack at the beginning of like we're selling all these over list, like you guys aren't taking that into account. And I bet there was like a 6-month lag on that and appraisers are just getting kicked in the teeth, man. Right. You know,
I couldn't tell you how many discussions I had with agents and said, we had 25 showings and 15 offers. What do you mean it didn't appraise?
Exactly.
Well, there is no line item on the appraisal report for activity.
There isn't at all.
But the demand was obviously there. And then running a region in other states, Florida's an anomaly right now. It's home values doubled in Florida. From the end of 2020, at the end of it, they just started going up unbelievably. Now you're looking at homes that in the $600,000 range. They're now 1.2, 1.3 2 years later.
Yeah, and then we ran into we talked about this a couple of years ago. So because of that, what ended up being the biggest lagger was insurance.
Oh, goodness.
Right, and you got to think, unfortunately, I mean, I know Florida just went through a hurricane, and in North Carolina, half the United States just went through one hurricane. But, they got hammered with hurricanes for like 5 years straight, and most of these people didn't even know they were underinsured because property values had gone up and materials had gone up so much that, that they're still insured. Right. At like $650,000, $700,000, and to rebuild their house or to fix their house is like $980,000.
And it's hurting us from a qualification standpoint now, because where we could estimate a lower insurance premium because of all the catastrophes that have happened, insurance premiums have gone up. I mean, every insurance agent I talk to says, Mark, the premiums are up across the board. It doesn't matter who you're talking to. And
they're going to go up again. That's usually the follow-up to that.
Absolutely. And to tell a client that, loves this home, has to have it, and I'm sorry, if you can't get insurance under X or buy the rate or something, then this doesn't work.
Yeah. And then you think about people who are on fixed incomes. Who have owned their houses forever and their property taxes are going up. I mean, it's just complex. Everybody wants to make it all so simple, but everything is so intertwined and so layered. Like you start dealing, you got Social Security, fixed incomes. We need that inventory, but that person can't leave anywhere. And it's not just, like assessed values have gone up, so property taxes have gone up. So on top of that, insurance has gone up. It's not just the mortgage payment.
Agreed.
Everything has gone up.
Everything has gone up.
Right, and so that's why people sit. So I'll jump into the stats real quick. I'll just have Fishers and Noblesville today, and it's inventory's up. It's still historically low, right? I mean, it's up from where we have been over the past couple of years. In Fishers, I had 31 go on the market over the past 7 days. 20 of those are still active, so only 11 pended in 7 days. But like in the past 7 days, the total amount that pended, 36. So it's negative inventory, right? So that's where like I started to notice these things, like and I've seen it pretty regularly, but it tends to be happening more and more. Average days on market right now is 31 days on market. The median is 9 in Fishers. There's 198 actually on the market. But if I pull out the people who sell in 7 days, average days on market in Fishers is 62. Which seems about right, quite honestly. I know Shelly's last week for Carmel was like 88, which seemed really high to me, but 60s feels pretty okay to me. Noblesville, I had 27 go on the market. 23 of them are still active, so only 4 pended within a week. 23 total pended there, so I actually picked up some inventory. I have 181 on the market in Noblesville. but their days on market is better. So their average days on market is 40. I'm going to take that back. It's worse. I don't know. I was looking at the wrong number. Their average days on market is 40. If I pull out the people who sell in 7 days, their average days on market is 81. So they're almost at a 3-month days on market if you don't sell perfectly. And so when I'm going into listing appointments, I basically assume we're not the 7 days anymore. Like I did sell one like in 3, but I have to set the proper expectations with people, because the odds are just not in our favor. Like, even if I have a house perfect, there's just so much that goes into it. Like, sometimes it's something as small as like this past weekend. I mean, it was 40-mile-an-hour winds, and it rained all weekend, and there was a home Colts game. Like, those things all don't seem like a big deal, but that right there can push you from a Thursday to a Tuesday, which puts you to like it's set on market, which can all of a sudden buy you 14 days on market without even looking, because of some adverse weather in a home Colts game. And I know that doesn't seem like a big deal, but I'm telling you, like, I see it all the time where little stuff like that piles up. Or another one that I always see is like Halloween. Halloween will do that to you. I like to be on the market for Halloween because there's a lot of people who are going to walk past the sign. But that's good marketing for me. It doesn't mean I'm going to sell your house, because all the people walking past your house live in the neighborhood and they're not trying to move into the same neighborhood. But there's just little things like that. And so it'll be interesting to see how this plays out over the next couple of weeks. And I don't know if this trend will stay, because the election's coming up. And so was it this little brief window, and then people will be back on pins and needles for like maybe 20 days at pre-election and then after election. And then I'm just a big believer we'll get through the election, and then people are like, oh yeah, the sky's not falling regardless of who's going to be here. And then, we end up back into December and everything's fine, similar to like what we always talk about. But I wish the market and the economy was as simple as people think it is. We do data every single week here, and there are times where I can look at the data and I'm missing one little subset of it, and I can interpret it totally incorrectly, right? And there's other times where I can put it all together and I can tell you where we're going to be at for 3 weeks. But it's just very, very intertwined with so much more than, like, I mean, to your point, you talked about a 3-month period that included back to school, an announcement in July about Fed rates, a hold off on that, and then the people waiting to see what would happen in September. Most people don't realize when the Fed drops the rate, because first of all, that rate and mortgage-backed securities are not completely connected.
Agreed.
Right. They're loosely connected, but by the time the Fed drops a rate, mortgages have already been baked in and dropped.
We saw the improvement as soon as they made the announcement that this is where they thought really in July. And
Correct.
So when it hit September, we did see, they announced the rate cut at, I forget what time it was, and a half hour later the chairman spoke and made some additional commentary. And now we're on to the next piece of economic data. What are they? It's like what's always new. We're always looking for the new. We're always
rates went up.
Yeah, unfortunately, we did lose some ground there after the announcement, which was kind of anticipated, but. Hopefully they've indicated will happen again in November. And what I certainly hope and pray is people don't wait. Well, I'm going to wait and see what happens in November, because they're already factoring in what's going to think
right
going to
now.
happen. What I'm encouraged by, and I learned this a long time ago, housing is the number one economic driver.
Yes.
If you think about how many other businesses it impacts, the home sale is just the tip. The plumbers and the electricians and the skilled traders and the Lowe's and the Home Depots and all the things that surround it.
Target.
Exactly.
Just towels and
all
tchotchke crap.
All that stuff. And
Yeah.
so it is the number one economic driver. So you hope and pray that our leadership understands that. And because if you lose housing, you lose so many other impacts to the economy, and that would be bad for everyone as a whole.
So I do a breakfast with some gentlemen in the industry that I super, super respect, and it was actually this morning, and somebody brought up a good point. So the next day that the Fed meets, it's election day. So will they drop, and so the comment was like, will they drop the rates that day or not? Because they don't want it to, like, I think they smartly will not want it to look politically motivated one way or the other. And so I'm just curious. And I was like, I don't know. I hadn't actually thought about that. I'd be curious to see if they do that. Regardless, to like what you were saying, I think we have an idea of where we're going, and we'll see all of that movement in October, not actually in November anyways. So
when people hear the announcement that they're leaning towards that, that's when they should start looking.
Correct.
Don't wait until the announcement's actually made.
Oh, so here's a good question for you then. This kind of sum it all up. What do you think about people floating their rates because they're watching the news and they're like, hey, rates are going, and like there's this thing that's been happening in the past 45 days, I'm sure you're aware, where people are like I'm going to float the rate because they're going to get better. But then they got worse there for a period.
Lock your rate.
Lock your rate.
Lock
Thank
your
you
rate.
very much.
It's a greater probability of the rate going up than it goes down. If rates drop, you can always refinance. But if they go back up, you can't fix that.
I agree. There's like this risk in this, like people feel like they're gambling. It's like, let it ride, put it all on 7 type stuff,
The conversation comes up a lot. And when I explain to people, here's if the rate improves a quarter, this is what you gain. If it goes up a quarter, this is what you lose. And if you're comfortable either way, then absolutely float. But if going up a quarter in rate impacts you financially, and now you can't afford the house you want, lock your rate in.
What's the most you see it change a payment anyways? Now, 50 basis points is a lot, right? But, it's not major swings.
Depends on the loan amount.
Yeah, that's fair. That's very fair.
Right.
That's very fair. It's very proportionate to the dollar amount. So, I don't know. I was talking to somebody about that a couple of weeks ago, and I had a client who's was like, let it ride.
Oh, yeah.
We got just like, what are we doing right now? But
if you're comfortable with your payment going up $150, great. If it doesn't bother you, but if it's like $150 is going to make a difference in your day-to-day, then why are you gambling?
Yeah.
Lock it in.
Just refi in 3 years, 2 years, call it a day,
Exactly.
and it's not a big deal.
Take the money and run.
Yep. All right. I'll let you give everybody your contact info if anybody wants to get a hold of you.
Appreciate it. Best way, I'll give you my cell phone. How's that? 317-443-8649.
Is the phone number at Broadway Diner still the same phone number?
I've had that same cell phone number since 1990-ish. So, yeah, this should be the same
That's
one.
amazing.
Now, it'd be the different office number, but, yeah.
Still rings the same phone, though.
Still rings to the same.
There we go.
At least it should.
Yeah. And I'm Kyle Morris with Morris Property Group and FC Tucker. My number is 317-649-5122. And Shelly will be back next week off of her lovely day flu that she has today. So everybody have a great weekend.
Thank you.